The US dollar closed Monday's trading higher in Iraq, with the currency hovering around 155,000 dinars per $100, signaling a slight upward movement in the exchange rate that has drawn attention from traders, businesses, and citizens alike. According to a recent market survey conducted by Shafak News, the dollar exhibited fluctuations across various exchange locations in Baghdad and other regions, reflecting a combination of local market forces, economic conditions, and international currency trends. In Baghdad, the capital city, the dollar traded in prominent exchange centers such as Al-Khaifa and Al-Harithia at 155,400 dinars per $100. This figure represents an increase from the previous trading session, which recorded the dollar at 154,400 dinars in the morning. The growth in the exchange rate, although moderate, suggests ongoing dynamics in Iraq's financial market, driven by factors including demand for foreign currency, the liquidity position of local banks, and broader economic uncertainties that influence investor behavior. Exchange shops in the heart of Baghdad further highlighted this upward trend. In retail exchange outlets, the US dollar was sold at 155,500 dinars, while purchase rate stood at 154,500 dinars. These figures indicate the margin at which exchange shops operate and the slightly higher price at which buyers are willing to obtain the dollar. The margin between buying and selling rates also reflects market liquidity and the risk premium that traders include due to the volatility of the local currency. For citizens and businesses relying on foreign currency for trade, imports, or other financial obligations, these fluctuations can have a direct impact on their purchasing power and financial planning. In the northern region of Iraq, the Kurdistan region's capital, Erbil, displayed slightly different pricing patterns. Exchange shops there listed the US dollar at 154,650 dinars for selling and 154,600 dinars for buying. Although the rates in Erbil are marginally lower than in Baghdad, they are consistent with regional variations influenced by local supply and demand dynamics, differences in exchange reserves, and variations in trade volume. These regional disparities in exchange rates are common in Iraq, as each governorate or city maintains exchange offices that react differently to market pressures, often influenced by the flow of goods, foreign investment, and the purchasing patterns of local residents. Analysts suggest that the recent upward movement of the dollar in Iraq could be attributed to several factors. One key aspect is the demand for US dollars in the import sector. Iraq, like many countries, relies on foreign currency to facilitate international trade, particularly for essential commodities, fuel, and medical supplies. When demand for dollars rises among importers, this can create upward pressure on the exchange rate, as more buyers compete for a finite supply of foreign currency. Additionally, fluctuations in oil revenues, which form a significant portion of Iraq's national income, can also impact the value of the dinar. When oil revenues are lower than expected or delayed, the central bank may need to intervene in the market to stabilize the currency, affecting the supply and demand balance. Another contributing factor to the dollar's movement in Iraq is the level of foreign investment and remittances. Iraq has a large diaspora population that regularly sends funds back home, often in US dollars. These inflows can temporarily support the dinar's value, but variations in these transfers, whether due to economic conditions abroad or changes in remittance policies, can influence the dollar's exchange rate locally. Similarly, foreign investors and international organizations conducting transactions in Iraq may impact currency flows, especially in sectors such as construction, infrastructure, and energy, which rely heavily on dollar-denominated contracts. Market. Experts have also noted that geopolitical events and regional developments can influence Iraq's currency market. Political stability, government decisions regarding fiscal policy, and announcements by the Central Bank of Iraq regarding monetary measures can all sway investor confidence and currency valuation. Even subtle changes in international economic trends, such as shifts in the value of the US dollar against other major currencies, like the euro or the pound, can indirectly affect Iraq's exchange rate due to its reliance on dollar-denominated trade and imports for businesses operating in Baghdad. The fluctuation of the US dollar against the Iraqi dinar requires careful financial management. Companies involved in import and export must consider exchange rate risks when negotiating contracts or planning cash flows. Sudden increases in the cost of foreign currency can directly raise operational expenses, while declines may temporarily ease costs but introduce uncertainty for pricing and budgeting. Similarly, individuals who rely on foreign currency for travel, online purchases, or savings are impacted by the daily shifts in exchange rates, making it essential for residents to monitor market trends closely. The slight increase observed in Baghdad's exchange rates, moving from 154,400 dinars in the morning to 155,400 dinars in certain exchange centers, underscores the volatility present in Iraq's currency market. Even seemingly modest changes can translate into substantial effects for large transactions or businesses that require regular access to US dollars. This situation highlights the importance of transparency in reporting currency rates and the need for reliable market data for informed decision-making. Shafaq News, through its surveys, provides valuable insights for both market participants and the general public, helping them navigate the complex landscape of Iraq's financial sector. In Erbil, while the dollar is slightly lower than in Baghdad, the trend mirrors similar upward movements, suggesting that regional markets are closely interconnected. Traders in Erbil monitor developments in Baghdad and adjust their pricing accordingly, albeit with slight time lags due to local market conditions and logistical factors. The consistency between the cities also reflects the influence of centralized monetary policies, as the Central Bank of Iraq sets guidelines that indirectly affect regional exchange offices, while allowing for local adaptation based on supply and demand. Financial analysts emphasize the role of the Central Bank of Iraq in stabilizing the currency. By managing foreign reserves, adjusting interest rates, and implementing policies that regulate liquidity in the banking system, the central bank aims to maintain confidence in the dinar and prevent excessive volatility. However, the effectiveness of these measures can vary, especially during periods of heightened economic uncertainty or external shocks. As a result, the market often reacts to both actual policy changes and anticipatory movements based on expectations of future interventions. For ordinary citizens, the exchange rate fluctuations have tangible implications for daily life. Consumers purchasing imported goods, electronic devices, or medical products may find prices influenced by the cost of the dollar. Similarly, families sending money abroad or receiving remittances need to consider how changes in exchange rates affect the value of their funds. In regions with higher exchange rates, the cost of living may increase slightly, whereas in areas with lower rates, residents might enjoy marginally more purchasing power when converting dinars into dollars. Moreover, the trading behavior of the dollar in Iraq reflects broader economic trends in the Middle East. Many countries in the region experience similar dynamics. where local currencies are influenced by the US dollar due to the dollar's role as the global reserve currency. International trade, oil exports, and financial inflows are often denominated in dollars, which links domestic exchange rates to global market movements. For Iraq, this connection underscores the importance of monitoring both local and international economic indicators, as changes in oil prices, global interest rates, or geopolitical developments can rapidly influence the value of the dinar. The current market scenario also emphasizes the role of exchange offices in facilitating transactions and maintaining market liquidity. Exchange shops in Baghdad and Erbil act as intermediaries between the public and the broader financial system, providing access to foreign currency while balancing supply and demand pressures. Their pricing decisions, margins, and operational strategies are crucial for market stability. By offering both buying and selling rates, these offices provide transparency and allow market participants to make informed decisions. Regarding currency exchanges, it is noteworthy that the difference between buying and selling rates, though relatively small, represents the operational costs and profit margins for exchange offices. In Baghdad, for example, the dollar is sold at 155,500 dinars and bought at 154,500 dinars, indicating a margin of about 1,000 dinars per $100. In Erbil, this margin is narrower, with selling prices at 154,650 dinars and buying at 154,600 dinars. Such differences can influence customer decisions on where to exchange currency, potentially driving competition among exchange shops to offer more favorable rates while maintaining profitability. Traders and financial observers often analyze these minor fluctuations to gauge market sentiment and predict future movements. Even small daily changes in exchange rates can signal trends, allowing businesses and investors to adjust their strategies accordingly. For example, a consistent upward trend in the dollar might encourage importers to secure foreign currency in advance, while a downward trend could provide opportunities for cost savings. By closely